G'day ladies and gentlemen, and welcome back to another Bitcoin update. Around 5 days ago on my YouTube channel, I mentioned the fact that bearish threats were developing. I continue to mention that throughout the last few days, and obviously these threats have developed a little bit more. Some of the threats being the DXY double bottom, the gold rejection, another one being the fact that Bitcoin was in a bearish triangle formation, a descending triangle formation, which it still actually is in. These threats have developed a little more. We've seen some short-term downwards price action. The last daily candle wasn't actually particularly bearish. I mean, look, we saw a huge wick down to the bottom, a liquidation wick, grabbing some liquidity, some liquidity, I should say, from this green range. That green range being between 25.2k and 26.7k, which is a historically pretty important support range for Bitcoin. So we've grabbed liquidity from a downside. Sometimes what happens, actually generally speaking, what happens when you grab liquidity from a downside is you see a reversal of the trend. And that could be the case here. We could be seeing some fuel for a move upwards back to the top of this triangle formation. But even if we did see that, right, because we haven't actually broken the triangle yet, that was just a liquidation wick. But even if we did see that, we'd still be in the same bearish triangle formation. We'd still be more likely to come downwards and break it down eventually. So I think that, regardless of short term could potentially be seeing a short reversal here, but even if it did, we're still at a bearish structure, right? And 4-hourly chart doesn't necessarily indicate bullishness. I mean, what we're seeing on the 4-hourly chart is we're seeing an inability of Bitcoin at this point. I mean, it could change, of Bitcoin to break back within the kind of triangle formation. On the 4-hourly chart, even though it's not reflected in the daily chart, we've actually broken below that triangle formation. We found support on this downtrending yellow line in the RSI. We saw a bounce there. It's very much worth having that drawn in on your chart for take profit zones and short positions. But as of right now, we've come back up and we're seeing a potential, look, we're breaking back into it now. I mean, 5 minutes ago, and I was looking at it, we weren't. A potential resistance support flip here, and we could be going downwards, but it looks as though, it could be a wick. Looks as though that could be seeing actual break back into the triangle, in which case we'd be following what I just said on the daily chart, potentially breaking back up within the triangle and seeing a potential rejection from here and then going downwards further. That's probably what we'd be looking at on the daily chart. But look, I also want to quickly say as well, because I've kind of leaned a lot more bearish in this video already. I also want to say as well that this region, I don't actually think is a region to be bearish on in a long-term scale at all. Okay, and that might sound ridiculous to hear, but it's not. I mean, you just look at the weekly chart, okay? Well, first of all, you look at the daily chart, you see the massive green range there. Second of all, you look at the weekly chart. What is at this region on the weekly chart? We have the center line of the Gaussian channel at 25.5k. We have the 200-week SMA at 26.1k. And we have the bull market support band in that rough price region, as well as the fact we have 25.2k and 24.3k major horizontal levels on the weekly chart, layering that region for support. That's 1, 2, 3, 4 major indicators of support in that region. We go to the monthly chart, we can see the same thing reflected. What do we have on the monthly chart? We have the 21 EMA, the blue line, the strongest monthly chart support and resistance zone on the entire monthly chart is right basically where we are now. In fact, we're a little bit below it at 27.7k. That doesn't change the fact that this entire region, basically from 28k down to like 24.3k, is layered with major support. So I actually don't think, and I think it's ridiculous to say, that this region here is a bearish place to be from a macro scale. Now, look, we can see, short-term deviations and all that kind of stuff. But as of right now, the macro structure is still very much intact, and we're still very much, on layered support here. So it doesn't really surprise me that we saw a liquidation wick to the downside, potentially grabbing liquidity before seeing a short-term reversal. It doesn't actually surprise me at all, considering how much support is in this region. That was just the market makers kind of testing the buyers, grabbing some liquidity there, and potentially seeing a short-term reversal, as I said over and over and over again. Where that liquidity come from? It came from people layering their buys at the 200-week SMA, at the Gaussian channel center line, at the bull market support band, at the top of this range here around 25.2k. That's where the liquidity came from. So, look, it's something that I've repeated over and over and over again. I don't think that you should be getting long-term bearish on Bitcoin in the slightest unless we break below, what I've said previously, 25.2k. I'm going to kind of distance myself from that a little bit now. I actually think unless we get below on a weekly candle close below 24.3k, because if we delete everything on the weekly chart, we go ahead and delete everything on the weekly chart, okay? And we delete all these indicators. Where is the actual major support level from a weekly time frame perspective? It's where these high level closes occurred, right? Back here in August, one close, one rejection, and back here in February, one close, one rejection from the same price region at 24.3k. That is very much the weekly chart resistance zone, and hence that is the weekly chart support zone. Drop back below that, we're entering the long-term weekly range. I've said previously, under the same logic, that if we drop below 25.2k, we'd be entering the same range that we saw from June all the way through to March. But I mean, I'm going to say it differently this time. I think that since that range goes on from June all the way through to March, which is what, 3 plus 6, which is 9 months, it's a 9-month range. I think we're going to go ahead and make it a weekly candle range. I think it's very much something that we need to be seeing weekly candle closes for, and hence, based on weekly candle closes, the support level and resistance level is actually 24.2k, not 25.3k. Sorry, 24.3k, not 25.2k. Hope that makes sense. Basically, so long as Bitcoin is above on the weekly candle close, 24.2k, I think that this kind of correction is basically just healthy. Okay, that's basically my overall view on Bitcoin. And look, I stand by that. And that's something that I'm going to be standing by. I think that, if we're looking at what 24.3k actually is, in fact, we'll draw it in here on the daily chart just so we know where it is for reference. 24.3k is this line over here. It doesn't really make sense as a support line on the daily chart, but it certainly does on the weekly chart, as we said before. We'll make it a pink line. Now, on top of everything we've mentioned, the 200-week SMA, the bull market support band, the Gaussian channel, everything like that, we also need to mention the fact that this uptrending yellow line that's stemming back all the way from January 2021 and retested over here in March 2023 will be supporting that region at 24.3k as well. So I think that if you're a bear and you're celebrating, at this point you're celebrating too early. You need to wait to see actual macro breakdowns. At this point in time, this is nothing but a small correction. Yes, the charts don't look great on the short term. This is something I've covered over and over and over again for 5 days. As I said before, 5 days ago, posted a video saying bearish threats were developing. They certainly have developed, and they certainly have led to downwards price action. But I don't think that these short-term bearish threats have materialized into anything that's really significant at this point in time. Now, total cryptocurrency market cap could be foreshadowing what's going to happen with Bitcoin. Total cryptocurrency market cap has broken downwards here. We've seen a resistance support flip in the bottom of the triangle. We could be indicating to go downwards here on total cryptocurrency market cap. Same thing happened on Ethereum. No point bringing up the chart. It's exactly the same, essentially. And, that could be indicating if Bitcoin goes down further short term. But again, it doesn't really matter what it does short term. So long as it holds these critical levels, that's all that really matters. I think that, there's enough evidence here to not be particularly worried for Bitcoin. We look at the monthly chart, we look at the RSI on the monthly chart, the critical level on the RSI is 44 on the monthly chart. If we go down further to something like 24.3k, guess what? We'll be testing that critical level and that will offer extra support. Same thing on the BLX, right? We've seen a bullish monthly candle cross on the RSI between the moving average there, the yellow one, and the RSI price line. And, every time we've seen that, we've seen significant gains. We saw that just a couple of months ago, and so far we've seen significant gains. This small correction we're seeing hasn't, destroyed that trend at all. In fact, it's perfectly normal. We've seen these crosses before, and we see red candles all the time within these crosses, sometimes within a matter of month, within a matter of 2 or 3 months, like we've seen at this time. So, yeah, look, I'm going to see like a broken record for as long as this correction lasts, so as long as nothing is disproven. Look, investors continue to hold tight to their Bitcoins. I know this is just a random on-chain chart. I don't necessarily believe in on-chain, but it is evidence of the fact that the 4-year cycle theory is progressing as normal. Generally speaking, you see, as per the blue graph, right, layered next to the price line for Bitcoin, generally speaking, you see people holding their Bitcoin during bear markets, okay? And that's basically any other time it's not a bull market, which is the 3 years out of the 4-year cycle. 1 year bull market, 3 years bear market by definition. So, what we're seeing is exactly the same as previous cycles, right? So we saw people holding their Bitcoin as the price went downwards and bottomed out and started to accumulate. Same thing over here and same thing over here. So the price action and the people are acting in line with the 4-year cycle still. And guess what? The 4-year cycle is still active. We've seen the bottom in Q4. And as of right now, we're in that kind of middle phase where we're just kind of lurking. And we did that in 2 previous cycles. We're probably going to be doing it again. The halving is in about a year. After the halving, that's when we really start to move upwards properly on a macro scale. So, look, everything's going to plan. I don't think you should be trusting too much bearish. I consider it FUD right now. I don't think it's based in reality at this point in time. And here's the thing, right? When it starts to actually prove itself, when we start to actually break down from critical levels, that's when I'll start to say it's an actual thing to believe. At this point, it's just so speculative. Look, the only reason I was able to say the bottom was in at 16.4k is because I trusted the charts. I'm going to trust the charts when it goes the other way as well. Right now, I'm trusting the charts. The charts say this correction at this point in time is healthy. The macro is still healthy as well. That's what the charts say. When that's not the case anymore, cool. I'll trust the charts and I'll flip over. But I don't think we'll get to that point. It doesn't really matter what I think though, doesn't it? It matters what happens. And that's the whole point. The whole point is trust the charts. It matters what happens. Doesn't matter what I think. At this point, what I think, right, is that we're not that bearish on a macro scale. Short term looks weak. That's what I think. but doesn't really matter what I think. That's what the TA represents as well. And you can say, oh, Wolf, that's your opinion. But in order to say that, you'd have to disagree with the fact that the Gaussian channel is irrelevant, the 200-week SMA is irrelevant, and the major support zone on the weekly chart is irrelevant. The bull market support band, you'd have to say it's irrelevant. So unless you disagree with everything I just said, unless you think all of those zones are irrelevant, even though they've been proven to be very important over time, then you'd have to agree with me in the fact that the macro is not bearish right now. It's basically just as simple as that. So, you can say it's my opinion all you want, but I think it's just the objective reality. And look, I've said this over and over and over again. I think that even if we do go down to new lows below 15K, I genuinely think that I will be happy with the position that I took. I think there comes a time where you can make the best position with the data you were given ahead of you, in front of you. And I think right now, the best position I can take with the data I've been provided is that I think the bottom is in. So if I'm proven wrong, cool. I put my eggs in the basket that I thought to be the best basket. And I think that was supported by the objective TA. I don't think you can really disagree with that. The 4-year cycle is one of the most objective TA trends you can find. This is based on the presidential cycle, 5 micro trends within a larger macro trend based on the halving. You're not going to get less, you're not going to get less subjective than that. That's very objective. So yeah, I'm trusting the 4-year cycle at this point in time. And I think that the macro looks good. I'm going to sound like a broken record for the next however long this lasts, and I apologize in advance, but that's just basically what it is at this point. Unless something actually happens, like a breakdown below 24.3k, then I'm just going to sound like a broken record. So that's my opinion on Bitcoin right now. That's what I think's going on. I hope you enjoyed it, guys. Let's check out a few things before we end the video. You guys know the drill by now. BitGet Exchange, my favorite exchange. I reached out to these guys for a partnership. They didn't reach out to me. That's a testament to how much I actually like the exchange. 5 times lower fees of Binance, non-KYC, everything you need in an exchange. Go ahead and sign up using my referral link below. Get a 15% trading fee discount for life. Then we've got the Crypto Academy. Want to learn how to trade? This is the place to do it. All the information is on the website. You can read the bio. You can throw us an email at the email address provided. We'll send you a full video walk down on how to use the course, what it actually looks like, what it entails. Go ahead and check out the website in the description below. And finally, the VIP group. You want to learn how to trade altcoins, or you want to trade altcoins with me on Telegram, make some money on altcoins. You can go ahead and check that out. It's 100 USD for 3 months, and we've released all of our previous trading results. All the information, again, is in the description below. Thanks, guys, for watching. Hope you enjoyed, and I'll catch you in the next video. Cheers.